Welcome to Chapter 1 of your MA course, Management Information. Let's start with an intro to what we mean by cost and management accounting in Section 1. We're going to talk about three main types of accounting. Now, the middle area, management accounting, is what we're really focused on, but it's important to get a feel for other areas of accounting. And I'll assume just a very small amount of knowledge in these early chapters, and particularly this one. Let's talk firstly about financial accounting. So, in essence, we're talking about recording, processing, and reporting of financial information to produce financial statements. So we're really talking externally to the business. We know that any business, for-profit business, has a series of transactions. Those transactions will be recorded and processed in some way in an accounting system. And the aim of that is to produce information in the form of, let's say, a profit and loss account and a balance sheet. Now, there are other areas too, but let's keep it simple just for the moment. Now, the importance of financial accounting is many and varied, in particular in relation to external users, but also internal as well, directors, management, etc. But let's think about it. Those financial statements invariably will be filed. They'll be filed with tax authorities. They'll be filed perhaps with a company's house type body, etc. So there are a variety of stakeholders, both internal and indeed external, that rely on financial accounting and indeed the financial statements. And obviously the FA course will sort of prime you so much more than the MA course in those areas. What about management accounting? Now, this is more internally focused. Note that we're talking about financial and, note, non-financial information to support management activities. So whilst financial accounting is sort of geared and influenced by compliance, in other words, compliance with laws, regulations, you need to file accounts with the tax authorities, you need to file them with government bodies. Management accounting is much more flexible. In other words, management can decide the activities that they will undertake to produce and indeed prepare financial and non-financial information. Now, just a quick note on non-financial. That's an important area, and that area has become much, much more important over the last 10 to 20 years. And what I mean briefly, and this will influence various subjects in your ACCA qualification. In essence, what we're talking about is that really reporting and indeed information that's produced for reporting can be twofold. And non-financial information, for example, something like quality, something like the customer perspective, areas outside of the number crunching has become more and more relevant in recent years. Watch out for that. What about cost accounting? Well, this is really a sort of a subset, if you will, or indeed a function of management accounting. Only one function. Now, it's mentioned here when we talk about identifying costs. Now, you may think the idea of identifying costs, let's say for product A, is quite straightforward. Well, in one way it is, but there are a myriad or a plethora, a variety of different approaches to evaluating the costs associated with product A. For example, the traditional approach, absorption costing or marginal costing, or perhaps more modern approaches, as we'll see, like ABC, activity-based costing. So costing is a large area within management accounting. And indeed, the MA examiner will focus in your exam on the various different techniques that management can use to identify costs. Let's move from here to a broader area. In other words, the idea of accounting fitting in somewhere. So really this idea of planning, decision making and control, that's the essence of management accounting. So if anyone was to say to you, well, can you define management accounting? Really, you'd have to use those three words. Absolutely. Now, what do we mean by them? Well, in essence, what management accountants need to do is plan, and much of the information that they will produce is based around planning. A simple example might be a budget or a forecast. And then outside of that, what they'll need to do is, broadly speaking, compare budgets, let's say, to actuals, and make decisions that will help them control the organization. So this sort of three-pronged area of planning in the first instance, actions in some kind, perhaps comparing actual to budget, and indeed controlling and going around in a loop, is the key essence of management accounting. More of that later. Now, outside of that, we talked about information, and indeed, we talked about decisions. So note that sort of different types of planning and decisions are taken at different levels in the management hierarchy. If you're working at the moment, I would guess that there are several levels or hierarchies within your particular organization. Really strategic at the top, tactical sort of in the middle, think middle level management, and then operational, think functional or shop floor, perhaps day-to-day activities in a manufacturing organization, for example. Now, in essence, what we need to have within any organization for management accounting purposes is alignment, or if you will, congruence between these areas. What we've got to make sure is the strategic plans at the top cascade down through middle management, i.e. tactical, and then again down to the shop floor or day-to-day activities. So you might think of strategic as sort of long-term, very important high-end decisions, tactical in terms of, how do we put those long-term high-end decisions into play, in the short to medium term, and then outside of that, operational, day-to-day. Let's move from there to the idea of data and information. Now, this is important because, you may well think, data and information, that's the same thing. Well, actually, it's not, certainly not for our purposes. Data is the raw stuff. It's the raw facts and figures. Information is data that has been processed in some way. Let's be very, very clear on the difference between those two things. There's one thing having some data, but what you need to do is to process it, put it into a form that it makes sense, that you can make informed decisions on it. And that's what management should do with data. Think about a simple accounting system. The data might be purchase invoices or sales invoices or petty cash receipts. When that information is processed within a transaction processing system into, let's say, a set of management accounts, now that's information. We can make some decisions based on information. It could be variances, it could be profitability for the last month, etc., etc. Moving from there, when we think about classifying data, two main areas here. Now think of this in terms of management accounting, but also perhaps think of it in terms of perhaps research. Let's say that as a strategic management accountant going forward, you're involved in decisions that the company is making at a corporate or strategic level. You might be tasked with researching information. So really, primary data is collected directly from the source, and note secondary data collected from someone other than the primary user. Now, what do we mean by that? Well, think about it. Some information is quite easily had. So, as an example, if I was looking for management information in relation to results over the last 3 months, that would be fairly easy to find because I could simply dig in to the management accounting system. The source is the company. Let's say if we were to go outside the company to look for information that's not internal, perhaps in relation to a competitor, perhaps in relation to industry statistics, etc. That's collected by someone other than the primary user, i.e. us. So broadly speaking, you might think of sort of primary data in one way as sort of internal data, although it doesn't have to be, and secondary, information or data that's been collected elsewhere that you look for perhaps outside the organization.